Hey there, future chartered accountants, and welcome to this explainer. If you're gearing up for your ICAI exams, you are in exactly the right place. Today, we're diving into the ultimate definitive exam revision masterclass for SA 580, written representations. Our goal here is pretty simple. We're going to break down all the complexities, hunt down the exact keywords your examiners are looking for, and make this session so comprehensive that it completely replaces your textbook chapter for this standard. Seriously, you won't even need to go back to it. So let's get right to it. Okay, let's dive into our six-part journey today. We'll be covering the core of SA 580, management versus auditor duties, what's inside the representation letter, the golden rule, what to do about refusals and unreliable representations, and finally, a toolkit to master the exam. All right, part one, the core of SA 580. To really wrap our heads around this standard, we have to step into the incredibly high-stakes world of auditing. As auditors, we're constantly on the hunt for rock-solid proof to back up our final opinion on those financial statements. Which brings up a pretty fundamental question. Why isn't a verbal promise for management enough? I mean, picture this. You're sitting across from a CEO, and they swear to you, yes, absolutely, we've given you all the records. Well, in the rigorous world of auditing, spoken words just kind of disappear into thin air, don't they? A verbal assurance is fragile. Written records, on the other hand, endure. They hold real weight, they create accountability, and they form a tangible, physical piece of your audit file. And that perfectly tees up this formal definition. A written representation is literally a written statement provided by management to the auditor to confirm certain matters, or to support other audit evidence. Now, for your exams, you absolutely have to remember the ICAI keywords here. This statement is almost always provided in the form of a management representation letter, or MRL, and crucially, this is a big one, it serves as audit evidence. It exists to explicitly confirm management's responsibilities, reduce any misunderstandings, and strongly support the conclusions we reach during the audit. Moving right along to part two, management versus auditor duties. Now, when it comes to the MRL, there's a very strict boundary line between who does what, and this brilliantly illustrates that divide. Management is the creator. It's on them to prepare the financial statements, maintain the accounting records, disclose the relevant info, and ultimately hand over these written representations. The auditor, well, we are the skeptical evaluators. Our job isn't to make the statements, it's to audit them. We request representations, sure, but then we have to evaluate their reliability and verify them through our own independent audit procedures. Never, ever confuse the maker with the checker. Okay, part three, inside the representation letter. So what exactly are we asking management to sign their name to? Let's rip open the envelope and take a look at this list. Honestly, you should treat this as your ultimate mental checklist for the exam. When management signs the MRL, they are officially confirming that they've fulfilled their responsibility for the financial statements. They're confirming completeness, meaning they haven't hidden a secret stash of accounting records from us. They have to state in writing that they've disclosed any known or suspected fraud and any non-compliance with laws and regulations. Plus, they sign off that all related parties are identified, subsequent events are communicated, and that using the going concern basis is appropriate. You definitely want to lock these bullet points into your memory. And here is a highly testable rule regarding the MRL, the date. The written representation should be dated as near as practicable to, but strictly not after, the date of the auditor's report. Why is that so important? Well, because the letter needs to cover the entire period referred to in the audit report. Think about it. You can't issue an audit report on a Monday and then have management confirm the facts on a Thursday. That just doesn't work. The confirmation has to come first or at the exact same time. Which leads us to part four, the ultimate golden rule. Listen, if you take away absolutely nothing else from this explainer for your exam, make sure it is this exact quote. Written representations are necessary audit evidence, but they are never a substitute for other sufficient appropriate audit evidence. So the crucial point is that getting a signed letter from management doesn't mean we just get to pack up our bags, high five, and go home early. No way. It is a necessary piece of the puzzle for sure, but it does not replace the hard work of actual auditing. Dropping this exact phrasing into an exam answer shows the grader you have a deep, fundamental understanding of the standard. Let's do a quick reality check, using fraud as our example. Step 1, management hands you a signed letter boldly stating, no fraud has occurred during the year. Step 2, as auditors, we absolutely cannot rely solely on this statement. We can't just check a box and say, well, they promised. Step 3, we must perform separate, independent audit procedures to verify that assertion ourselves. Think of the MRL like a safety net. It's great to have, and honestly, it's required, but we still have to climb up and inspect the ropes ourselves to make sure the whole structure is sound. The exact same logic goes for inventory, legal cases, related party transactions, you name it. Trust, but rigorously verify.
All right, part 5, refusals and unreliable representations. But what happens when things go completely off the rails? We're talking crisis mode on an audit here. If management just flat out refuses to provide the written representation, we follow this exact decision tree. First up, discuss the matter with them to figure out why they're refusing. Is it just a simple misunderstanding? If they dig their heels in and still refuse, step 2 is absolutely critical. You have to reassess management's integrity. I mean, if they won't put their promises in writing, can you really trust anything else they've told you? Probably not. Step 3, evaluate the impact. A refusal creates a massive scope limitation on your audit. And because of this scope limitation, step 4 means taking action by issuing either a qualified opinion, or if the situation is severe enough, a full-blown disclaimer of opinion. Now flip the script. What if they do sign the letter, but it completely contradicts other audit evidence you found? If the representation seems unreliable, we don't just sweep the contradiction under the rug. Nope. We must perform additional audit procedures, aggressively seek out corroborating evidence, and once again, seriously reconsider management's integrity. Because honestly, a suspicious signature is sometimes way worse than no signature at all. And finally, part 6, master the exam. We have covered a ton of ground today, so for our grand finale, let's lock all this in with a memory toolkit so you can recall it perfectly under exam pressure. Introducing the represent mnemonic. Let's break this down letter by letter. R, request the written representation from management. E, evaluate its reliability. P, preparation of the financials must be confirmed by them. R, related parties must be completely disclosed. E, events after the reporting date, your subsequent events must be communicated. S, remember it supports audit evidence, but it never replaces it. E, ensure fraud and legal noncompliance are explicitly disclosed. N, no refusal allowed, otherwise, boom, you have a scope limitation. And T, take appropriate action, like issuing a qualified or disclaimer of opinion if things go south. Literally, just being able to scribble out the word represent on your scratch paper puts the entire framework of SA 580 right at your fingertips. And to make your life even easier, check this out. It's an SA 580 quick revision table. It perfectly summarizes everything we've just talked about, from the main objective to the required date, all the way down to the consequences of a refusal. I highly recommend taking a quick screenshot of this summary right now for your exam day review. It strips away all the extra fluff and just leaves you with pure, concentrated, high-scoring exam points. Before we wrap up this masterclass, I want to leave you with a slightly provocative thought to chew on. Think about this. If management readily signs that management representation letter, swearing up and down that everything is perfectly fine, but their day-to-day actions and the other audit evidence suggest otherwise, who are you really auditing? Are you just auditing a piece of paper they signed, or are you auditing the actual reality of the business? Keep that level of professional skepticism razor sharp. It's not just going to make you a top scorer on your ICAI exams, it's going to make you an exceptional auditor in the real world. Best of luck with your revision and keep studying smart.